capital market development initiative of the government of Ethiopia as a kind of starting point for the conversation. We need your feedback, your views, especially as we are starting to operationalize the proclamation, which will soon be ratified by the House of People's Representatives. My colleague Asafa is here. I have a colleague who is taken to be here, who has worked very closely on this initiative. Let me give you the outline of my presentation. So at first I wanted to talk a little bit about general issues about financial markets, why financial markets are important, what we mean by financial markets, and then focus on the main topic of today's discussion, which is capital market development issues, and then we'll conclude the presentation. So, just to give you a background of what we mean by financial markets, when we talk about financial markets, we have the money market on the one hand and the capital market on the other. The money market includes the T-bills market, the interbank money market, and other markets, including commercial papers, markets for derivatives, etc. And on the other hand, the capital market includes equity or stock, equity market or stock exchange, debt or bond market. The difference really between the two is mostly the maturity of the securities or the papers that are traded in the market. The money market is mostly on the short end of the market, and the capital market covers papers on the long end of the market. Now, why do we want to develop financial markets in Ethiopia? Development financial markets, as you may know, is one of the key objectives of the Homegrown Economic Reform Program, launched by, I think, at the end of December, the end of second half of 2019 by the government of Ethiopia. And then the financial market development is one of the key objectives. And just to give you the rationale why that is so, the first rationale is that when we look at the business surveys about constraints to doing business in Ethiopia, access to finance comes at the top. It is very consistent across different surveys. If you look at the doing business survey by the World Bank, the World Economic Reform, the World Economic Forum survey, and local surveys, access to finance, especially for long-term projects, is a very, very key bottleneck to doing business. Most of you are business people, so you know this very well. The second important rationale is that modernizing national savings, mobilizing national savings is very, very important for national economic development. It is important because it creates liquidity in the economy. When we talk about national savings, I'm referring to especially financial savings. When we say it creates liquidity in the economy, it's because of the absence of opportunities for long-term saving in the economy. Many people usually use illiquid assets such as real estate as a way of safeguarding their wealth from, in particular, from inflation. So that's inefficient from an economy point of view because assets such as real estate are not liquid. You cannot easily convert it into cash and invest it if you wanted to change your mind at any time. So it's very important to have financial instruments that can also be used as a way of saving for long term. Because if there is a market for those instruments, you can always convert them into cash and use them for other purposes when you need it. And that liquidity is very important for the economy. The second important reason why mobilizing savings is key for the economy is it reduces the dependence on foreign capital. Today if the government wants to build infrastructure, if the government wants to invest on something long term, and if corporations also want to invest in long term, if they are lucky, they can only do that through borrowing abroad, because there is no long-term source of financing here in the country. But we know that relying on foreign capital exposes us to for macroeconomic imbalances, in particular foreign exchange imbalances, and also external debt, vulnerabilities to external debt. So to reduce that source of macroeconomic vulnerability, it's very important to have our own source of long-term financing, and that's what the capital market offers. The third reason why we need to develop financial markets is that markets foster price discovery, and they promote, or are very important for efficient allocation of resources in the economy. As you know, for the benchmark for pricing of any asset in developed market country economies is financial market instruments, in particular treasury bonds. Without that, it's not even clear how you price assets. I don't know, for example, banks, how they price collateral assets today, because there is no benchmark. Simply, there is no transparent market where you can see the price of assets. And for efficient allocation of resources, it's very, very important that we have a clear, a transparent market for assets. So the fourth but related rationale is missing financial markets are likely to have resulted in underinvestment. As I said earlier, if you wanted to invest long term, if you have a project that needs financing for 20, 30, 15 years, today you go to the banks, chances are very, very high that you will get that financing, because it's not the job of banks to intermediate long-term finance. They have short-term liability, and they can only create short-term assets so that they are not exposed to maturity mismatch in their balance sheets. And in the absence of capital markets, simply that missing market means that projects that are likely to have a long-term maturity of phase, and that are very important for productivity, innovation, job creation, are not going to have financing unless they are lucky enough and they qualify for external financing, which has its own macroeconomic consequences, as I said earlier. So that missing market means underinvestment, means no opportunities for job creation. So in general, in conclusion, financial markets, well-developed financial markets, can help achieve the objectives of homegrown economic reform program, which include addressing macroeconomic imbalances, rebalancing growth, and enhancing productivity. Having said that, how do we see the development of financial markets? So the way we see it is that we have four phases. The first and initial phase is liberalization. We started with liberalization. As you may recall, the financial sector was opened as an initial step to the diaspora, in particular foreign nationals of Ethiopian origin. That was one of the liberalizations. The second one, most of you may recall that the NPE bill was also repealed in November 2019, and the T-bills market was liberalized in December 2019. So those were the initial phases, because without liberalization, with a system that's bound by financial repression, markets will not develop. So that's why these initial steps were taken.
The second phase is the development of money markets. In particular, more plain vanilla type money markets, the T-bills market, the interbank money market. As I said earlier, the T-bills market was liberalized in December 2019 and has been since then, has been deepening really very, very well, better than even our expectations, because if you compare like how much of the budget financing comes from the T-bills, that's the T-bills that's auction with a free market, with a competitive auction, is really very, very significant, a large share of the budget. So I think at this pace of development, we are very confident that the T-bills market will really deepen going forward. The second one that the NBE has been working and still in the works is the development of the interbank money market. As you know, there is no interbank money market today. There are informal deposit placements between banks, but that's not really efficient. They are long-term, and it's based on a kind of bilateral mutual trust. So it's not really a market. And it's very important to have that interbank market, because sometimes you see the system as a system is liquid, but some banks are hoarding liquidity, others are having challenge or liquidity shortage. They come to the NBE. The NBE of course has to respond, and that means in the interest of those banks, we would be injecting liquidity to already a liquid system, which is not efficient from a monetary policy or liquidity, broader systemic liquidity management point of view. Because you don't want to, in principle, the NBE should be only responding to systemic liquidity situations. Otherwise, the system itself should be taken care of in terms of imbalance between different banks. But in the absence of interbank money market, we don't have that. So that's why the NBE is taking this as a key priority, and we're working with Frontclear, a money market consulting firm based in the Netherlands, and we're working on the area of capacity building, in the area of creating a legal framework for secure financial transactions, in the area of also infrastructure. We need to have a market infrastructure such as CSD and trading platforms, etc. So that's what the NBE is currently working on, working also with banks, in collaboration with banks. Capacity building also effort includes them. The third one, and which is a topic of today's discussion, is the launching of the Securities Exchange. And that's more for the secondary market for equities, for bonds, issuance of bonds, and especially government bonds, and secondary market for government bonds, and maybe basic derivatives. So the proclamation is currently with the House of People's Representatives. In the next couple of weeks, we expect it to be approved. We already have gone through all the steps. And when that is launched, we need to start operationalizing, and that's why we are starting to engage with you today. And the third one is more deepening of the Securities Exchange, in particular getting into more advanced securities, such as derivatives, asset-backed securities. These are the trading on these securities requires more advanced understanding of how the securitization process works, and also we need to have supporting institutions such as rating agencies. So corporate bond also would come there, because without having rating agencies, it would be very hard to price corporate bonds. So that's how we are working, and how we see the development of the phasing or sequencing of financial market development. Would be nice to see your feedback on this later during the discussion. Now let's focus on the capital market, which is the main subject of this today's discussion. So this is outline. Just go through the outline. I mean the rationale. Why do we need capital markets? What are the challenges in developing capital markets. How do we create enabling environment to address development of capital markets? Just to give you a highlight of the proclamation, and discuss about operational steps. That's really the main conclusion of this today's discussion would be who should do what, and how the government and the public sector and the private sector can collaborate to make this happen. So, in terms of the rationale, again, I already discussed earlier about the importance of capital markets. It's just to make it more comprehensive. One of the main objectives of capital markets is to mobilize savings and private capital, in particular long-term savings and private capital. Why this is important? Because it's very important to have long-term financing to promote long-term investment, and having that long-term intermediate market cap for intermediating long-term savings to long-term investment is very critical, which is absent today. And also capital markets innovate and promote innovation through providing information. As we will see later, the capital market, participating in the capital market really requires rigorous accounting standards, rigorous information disclosure. So by itself will push firms to really innovate. And that's really very important. And the other one is that capital markets, financial investors who are willing to take risk would be able to invest in firms that are otherwise considered as risky, but are likely to be the source of innovation in the economy. The third one, in terms of this intermediating finance, long-term finance in the economy, is financial deepening. On the one hand, capital markets help complement with banks, and on the other hand, they also push banks and create that competitive spur, and making so that will help deepening the financial sector. The second angle, or very important benefit of capital markets, is that it really enhances the stability and the resilience of the economy. How? First of all, it improves financial, in general, macroeconomic policy management. A fiscal policy that relies on market-based financing would not foul or would not get into inflationary source of financing, such as borrowing from the central bank, for example. And also, a monetary policy that relies market-based instruments would also not only support the development of markets, but also would be more effective in controlling inflation. So that's how a capital market helps in strengthening financial stability in the economy. The second one is it also enhances economic resilience. As I said earlier, if we have a local source of capital, a market for intermediating capital in the economy, our reliance on foreign capital will be lower, and that means foreign capital, as you know, is ultimately destined to go back, and that creates vulnerability to the economy, especially if it's a source. We're relying more short-term capital. They are very volatile. They respond to shocks. So every time that we face there is a negative news, they go out, they leave the country. That makes the economy vulnerable to the vagaries of capital market volatility. And having a capital market, having a domestic source of institutional investors would really help to build resilience. And the third one is diversification. Of course, both financial investors and also users of finance, they would have diverse source of, from the investors' point of view, financial investors or savers' point of view, they have a diverse source of or saving. Instead of relying only on bank deposits, they would have different other vehicles of saving, and especially saving that would give a better return. And from a firm's point of view, they would also have diverse source of financing. That diversity really helps strengthen the economy resilience of the economy as well. Then there is risk management. When there is capital markets, we will have instruments that will help firms manage their risks. Derivatives, for example, futures, forwards, these are the kind of instruments that firms can use to protect themselves from risks. So that's why, in a nutshell, why we need capital markets. The importance of capital markets is not just on a systemic point of view. We have here, if you look at from, it's just the other side, flip side of what we discussed, from a stakeholder point of view, for households and institutional savers, such as security, social security agencies, it will provide additional sources of opportunities for saving, especially for long-term saving opportunities, long-term and liquid saving instruments. For banks and other financial institutions, it's not only that they need to compete with these markets, they also have opportunities for raising capital, opportunities for risk management, and opportunities for engaging in, let's say, capital market service providing services. For non-financial firms, it's clearly is a source of long-term financing. For the government, we already saw, it helps the government to manage the macroeconomic more efficiently and effectively. But the road to development of capital markets is not smooth, it's not easy. There are significant challenges, especially when we look at the experience of other countries, in particular in the region. We have seen that most of the efforts have not really succeeded as they anticipated to. And the reason being, there are many challenges to overcome. On the supply side of securities, the challenge could include insufficient number of companies that are eligible to issue. The high cost of capital market, the participating in the market may deter many firms. That cost could be due to structural issues and limited types of instruments available in the market. So these are the challenges that are structural in nature, and that really requires both the efforts of the private and the public sector to overcome. The second one is on the demand side of securities. The main source of liquidity, the main source of demand for securities is usually institutional investors. When we say institutional investors, we are talking about pension funds, insurance companies, or other mutual funds who would aggregate funds from the economy and they invest in the capital market. So in the absence of well-developed institutional investor base, it would be very difficult to deepen the capital market, to develop the capital market. So the challenge for us is how can we, in the first place, help the existing institutional investors such as pension funds and insurance companies to really develop, to have the capacity to invest in the capital market, and at the same time, how can we facilitate the creation of new institutional forms of institutional investors, such as mutual funds. The third challenge is from the infrastructure point of view. The capital market requires a high technical, highly technical knowledge, technology, and having, one missing that technology would be difficult to develop the market. And two, even if we have technology ill-fitted, highly maybe sophisticated, not suited to the current level of development, and the fact that it's sophisticated may mean that it will be costly, would also deter the development of capital markets. From an infrastructure and service point of view, limited number of capital market service providers, such as rating agencies, for example, could also be a challenge. And the fourth one is from the regulatory and supervision framework. Here we may not have a regulatory authority that has the capacity to supervise and to help the market develop. And we may have also insufficient or ill-suited regulatory framework, the legal framework itself. And the other one is really the lack of coordination across regulators, among regulators, such as between the NBE, the new capital market regulator, and other regulators. This is very important because we need to be able to mitigate systemic risks. We need to have a macro prudential, macro coordination and macro prudential policies. And having crisis not being able to mitigate systemic risk and having crisis would undermine public trust on the financial markets. So really it's very, very important to have an able, very, very strong capital market regulatory authority to really create that trust in the public, because without trust, markets will not develop. And the last one is enabling environment. The capital market does not stand by itself. I mean, it needs supporting policies from tax policy point of view, from saving investment policy point of view. For example, if tax system is not revised, the current tax system does not take into account even the existence of markets. So there are no considerations for the capital market development. So we need to revise that. The macro environment itself, having a stable macroeconomic system, having a low and stable price inflation is very, very crucial, very important. So creating that macroeconomic environment, enabling environment is very important, and hence the focus of the following this slide. So when we talk about creating an enabling environment, the first important point is stable macro. Without stable macro, there will not be stable markets, there will not be development of markets. So it's very, very important that the homegrown economic reform program succeeds, which has three, as you know, 3 years program. We are a year and a half in implementing that program. We really need to make sure that we need to address inflation and we need to address the foreign exchange problem. We need to also control our or address our debt vulnerability, external debt vulnerability in particular, and we need to safeguard the financial system. Once we do that, we will be able to create an enabling environment for the development of the market. And it's very, very important because people ask today that how do you talk about markets when you have inflation at 20%? So it's very important to understand that the development of capital markets is a long-term project. We are not talking about launching the market today. We are just starting that journey, long journey, and we should not be discouraged by short-term macroeconomic challenge. We can start the work on the capital markets while addressing those challenges. The second one is developing a robust legal and regulatory framework, which is the main objective of the capital market proclamation, which I will cover in the next slide. And the third one I mentioned earlier, supporting policies, let's say taxes, for example, the current regulation for institutional investors, including social security agencies and insurance corporations. If the current investment policy is in place, they will not be able to participate in the market. So we need to revise, we need to look into that as well. Then the capacity building. We are especially in the capital market. When we talk about capital markets, we are very, very much starting from nothing. And there is no ecosystem, there is no local talent base, and we are working to develop that. I will come later in detail what the efforts that are being undertaken. But before that, just to give you a basic idea of highlight of what the capital market proclamation does. Most of you perhaps have already read the proclamation, but just to give you a summary of what is the objective of that proclamation. The objective of the proclamation is first to give a legal status for key capital market institutions, the market itself, the institutions, because in the current legal framework, there is no basis for creation of those institutions. And in particular, when we talk about capital market institutions, we are talking about the regulatory authority, we are talking about the security exchange itself, the market, and other institutions such as the securities, depository and clearing companies. We are talking about other capital market service providers such as brokers, dealers, investment banks, rating agencies, investment advisors. There is simply no currently legal framework for them to exist. So we need to have licensing a regulation framework, a licensing requirement for the existence of these institutions. And last but not least is the Capital Market Tribunal. That is also covered in the proclamation. The parenthesis, reference in the parenthesis is the parts or where these are covered in the proclamation. So the reason why we need a capital market proclamation is because we want to make sure that there is a specialized court for litigating financial market, capital market issues, especially the conflict between any potential conflict between the market players and the regulatory authority itself. Because if they go to the court, mainstream court, we know what will happen. And these capital markets are very, very, very fast-moving markets, and they cannot wait for the courts to litigate any conflict. So that's why we need to have a specialized court that will deal with these issues. And the third one is very important objective of a legal framework for capital markets is a framework for protection of investors and mitigation of systemic risk. Because it's very important to have a trust, as I said. Public trust is key for the market development. To have that public trust, we need to protect the economic interest of investors, in particular minority retail investors, because they are putting their money with a trust that they will be protected by the system. So failing them means we will not have a market, seriously. So with that in mind, the Capital Market Proclamation it clarifies the disclosure requirement. What kind of information should the IPO issuers are expected to publicly or share publicly, the accounting standards. It also draws a boundary between legal trading and illegal and legal trading practices. Not only that, it has also legal liabilities, criminal liabilities against breach of those rules, and that could go up to rigorous imprisonment and severe financial fines. The third one is provides a legal basis for the establishment and management of a compensation fund. In the event that all of these safeguards do not work and there is a failure by a service provider, and because of that there is a loss incurred by the investor, there needs to be a compensation fund. So the capital market, the proclamation itself has provisions for creation and management of the fund. So having said that, so what are the initiatives? How do we start operationalizing all these ingredients, in particular in the context where we do not have a local know-how, talent, and technology and capital? So that's where I think really, in my view, today's conversation should focus. What should we do? What is expected of the government? What is expected from the private sector? And I think it's very, very, very important that we start the work now, so that we, because it's a long-term process. We cannot have the market launched today, for example, because of the ingredients or the efforts that are needed that I'm going to cover. By the way, because of this no local talent, no local know-how, technology, and capital, or at least limited capital, the capital market ecosystem itself is open to foreign investment. Even though it's part of the financial sector, but it's a new financial sector. It's not really part of the prohibited, the restricted existing traditional financial sectors such as banks, insurance, and microfinance. So that's why we think that we need to start from the beginning, that we need to open this to foreign investors, so that we can get their technology, their talent, know-how, and that's the best way of also building local capacity, especially through collaboration between local and foreign investors. So from the government point of view, these are the main tasks that we have identified and that we will be working on. The first one is establish the capital market authority as per the proclamation. and that just to give you an idea of the Capital Market Authority, it will be an autonomous authority. It will be accountable to the Prime Minister. It will have its own, independent board, unlike current public institutions. The board, with the exception of 2 ex officio members, which is the governor of the National Bank of Ethiopia and the director of the Accounting and Audit Board, which are by design considered to be ex officio members because of the coordination that's needed for macro-prudential regulation that I mentioned earlier. They have a regulatory function. The remaining board members will be recruited from the market based on their qualification. So that's very, very important because it really requires technical expertise. The second angle is it will be financially, budget-wise, autonomous, self-sufficient. It will have its own personnel policy so that it will be able to recruit and maintain its talent that is proportional to the need for regulating and supervising a capital market. So we are working with that spirit. We are trying to also reach out to development partners so that they can support financially until it will be self-sufficient by itself by having a regular stream of revenue when the market is up and functioning. So the other work that's needed for the authority is drafting of directives. The proclamation, operationalizing the proclamation requires drafting specific directives. The proclamation itself, provides an overall guidance. It only offers a framework. It does not get into specifics. It gives flexibility to the authority to be able to issue directives as per the market level of market development and the situation. So it's very important that we start drafting the directives so that by the time the authority is established, it will start issuing directives, it will start licensing market intermediaries. The second key, very, very important institution that needs to be established, that we need to start work, and here there is a need to collaborate with the private sector, is the launching of the exchange. The exchange is has a PPP model and mostly private sector ownership with a cap for public sector or government ownership of 25%. So 75%, a minimum of 75% will be private sector, and therefore we need to reach out to the private sector, both local investors and foreign investors, especially to attract very well-established exchange operators, global exchange operators, so that they can bring the technologies, the infrastructure that's needed, and as well as the public itself to invest in this public company. So we need to start engaging with a transaction advisor to begin with. So the third one is development of market infrastructure. As I said, ideally we wanted to attract an exchange operator, global exchange operator, so that they can bring their technology, their know-how, in exchange for a stake in the securities exchange. If this doesn't happen, we are thinking about contingency plans. How can we make sure that there will be at least a minimum, required infrastructure, market infrastructure? So at the NB, we are working on that. And then there is a capacity building and investor education. We have been working, banks, insurance, corporations, and pension funds. You may know this very well. And universities, some universities too, have been engaging with them. Engaging with a Chartered Institute for Securities and Investment, a London-based securities training, a securities market training and certification program. We have trained 100+ experts, public, servants, financial sector employees, as well as university professors, and they have been taking the certification as well. And now we are starting the second round with more opportunities. By the way, this is kindly funded by Financial Sector Deepening Africa, a UK government funded entity. And we're working now about to launch the second phase with more opportunities, but this time we will be launching, we'll be advertising publicly so that it will be based on merit, individual merit, and demonstrated interest than assigning to institutions, because we have faced difficulties when we assign that. Individuals are assigned, but they are not really motivated to finish that work. It's 10 weeks training, and after, that will be a waste of really public resources, especially really scarce foreign exchange, if someone is assigned but doesn't take really advantage of it. So that's what we're working currently, also trying to engage with universities, because that's very important for long-term capacity building. And there is also soon to be established Ethiopian Institute for Financial Studies. This will be launched by the NBE. Again, we will engage with stakeholders on this as well. We'll try to make it more PPP as well, and that will be the center of excellence on financial sector issues, not only capital market, but also other financial sector issues. So that's also another area of opportunity for capacity building. And finally, policy review and roadmap, development of a roadmap. A policy review, as I said earlier, we need to review the tax policy, the investment and the institutional investment regulations. And we need to also prepare a long-term, medium to long-term roadmap that will provide guidance to markets and as well as policymakers. So that's in the works. We are engaging with international development partners on these issues. On the private sector, finally, on the private sector side, we think that it's very, very important the private sector starts looking into the capital market proclamation with the objective of understanding opportunities as well as challenges. Challenges meaning, what do I need to do to be able to participate in this market? What does it take to issue an IPO? What does it take to participate as an investment bank, an investment advisor? So all these kind of work, these issues really require a long-term planning, long planning and work. So you need to private sector needs to start planning on these issues as well. On building capacity, participate in the building capacity effort. It should be a public-private partnership. It cannot be just today we may be getting support from development partners, but that's not sustainable. We need to build our own local capacity with our own resources. That's where another collaboration with the public sector is important. And then coordinate and collaborate within the private sector. Especially, it's very important that the private sector itself is kind of creating an economies of scale for, let's say, hiring, engaging with transaction advisors, training, getting training or creating training opportunities, and maybe attract and engage with foreign investors so that you can collaborate with them, work with them, and build your own capacity through that. And then collaborate with government on the launching of the Securities Exchange. I already spoke about the Ethiopian Securities Exchange. It needs the active participation of the private sector, and partner with the government on capacity building and training opportunities. I will already mention that. So in conclusion, Ethiopia is really undergoing through transformative economic reform program, in particular in the financial sector. On the monetary policy, on money market issues, we are engaging with the banks, for example, on soon to be launched open market operation, standing facilities, market-based instruments that will have an impact in terms of stimulating market development, and as well as it will help the effectiveness of monetary policy. And now with the capital market, I think it's really very, very transformative endeavor, but making that success really requires strong collaboration, partnership between the public and the private sector and within the private sector. And this presentation is really the starting point for that collaboration. I think call for the private sector to actively and proactively participate. It's a way, as a way of concluding my presentation, I wanted to highlight on key training opportunities, upcoming opportunities. As I said earlier, the Chartered Institute for Securities and Investment, it's a training and certification program we will launch soon, and will be, they gave us about 200 opportunities, of which 50 will be an advanced training for those who passed the first certification program. The remaining 150 will be the basic training program, and we're going to launch that to the market, as I said earlier, so that it will be efficiently utilized by the the ecosystem, so that those which have the interest, who have the interest and demonstrated really interest and merit will be able to take the opportunity. The second training which will come, or seminar, is an IPO seminar. This is mostly for open to potential issuers, corporates who are interested to issue, just to have an idea of what does it take to issue an IPO. What do you need to do? What are the information disclosure requirements? All important ingredients that you need to know. The third one is front clear training. It's a year-long front clear training. This is for money markets open to banks and insurance companies, mostly banks and the NBE, because the interbank money market is really between banks and the NBE. So this I think is already communicated to banks, and these are the the opportunities that are upcoming or are underway, and we will communicate to the market when there are more opportunities. So this is my presentation. Thank you very much for listening, for your time, and looking forward to your comments, feedback, and regards the discussion. Thank you.
Sign of the times. We have to spend so much time on all of these stuff. Good morning, everyone. Please join me thanking Ato Mallesa for his, not just for the fantastic presentation he just gave us, but also for his leadership in bringing to bear all of this study, all this feedback, all this experience from so many of you into progress, what amounts to progress in the Ethiopian financial sector. Thank you, Ato Mallesa. So, my name is Henok. I think I know almost all of you, but let me introduce myself anyways. And I am the managing partner at Precise. We are a management consulting firm who is dedicated to economic development issues in Ethiopia. Financial sector happens to be one of our biggest areas of concern as well. So we are very happy to have this partnership with Ato Mallesa and the National Bank to have this discussion. One of the three areas we focus in partnership with development partners is policy, especially private sector enhancing policy. And our ambition is to make sure that private sector and public sector have meaningful, useful, and practical dialogue so that the policies that are coming out are implementable and are sustainable and are useful to uplift the lot of the many in Ethiopia. So not just seeing economic development in some areas and not in other areas, urban, rural, whatsoever. So it's important to have that participation. So with that, I'm very happy to see so many faces here in the private sector, braving the traffic jams, the busy work schedules, and COVID. You heard Ato Mallesa? He threw the gauntlet to the private sector in many ways. And I think that's really ironic. Some of us in this room have been talking about more room for the private sector for so many years, and now the gauntlet has been thrown. It's really our time. It is, I cannot emphasize how important it is for the private sector now to step up and really do what we need to do to show that the economy can rely on the private sector, can create jobs and prosperity in partnership with the public sector. So with that, what I would like to do now is, I know you all have burning questions, but I want to start it all off by inviting one of our representatives here from the private sector, Ato Tesfaye Haile Mikael. He's in the audience with us. What I would like to do is ask him to give us a few minutes of reflection. He was part of the committee that was set up to advise on the capital markets development. He also has many years of experience both in the United States as well as in Ethiopia, in the financial sector as a CFO, as a CEO, generally as a C-level executive for over 30 years. He has also been a market player in the United States. He's helped to take a company public on the NASDAQ exchange. He happens to now be the second person I know who have done that as an entrepreneur. There's Joseph in the back, who was also experienced back in his days in Canada with taking an IT firm on the NASDAQ. So I think this makes two Ethiopians. This is good experience that we can lay to bear on developing Ethiopia. He's been on many boards, including East African Tiger Brands, National Cement. I mean, the list goes on and on, and he's now serving as a co-founder and advisor at Cornerstone Advisory Services and as a senior VP at Cerebrus Capital Management, based here in Ethiopia. He has a wealth of experience, and I would like to invite him now to give us a few minutes of reflection before we open it up to you all for more questions, more burning practical questions that you might have. To this way.
Thank you. Good morning. What an exciting morning. Ato Meles has inspired us to listen to these very complex issues, as we may have listened to him. He mentioned a lot of things, why we need capital market for Ethiopia. Obviously, one of the things that help countries grow is capital market, along with the other economic sectors. So that's a very good idea for the country, and also for Ato Meles to spearhead this effort. I had a chance to work with him, and I really don't mind confessing that he's an extraordinary man who has a passion to accomplish what he planned to do. So we need those kind of people. We need those people who are committed to make change for our country. So with that, he has reviewed a lot of things this morning. Why we need capital market, why we need infrastructure, why we need capacity building, and how the legal structure is important to enforce capital market. And also the other infrastructure such as accounting and auditing board. The other also government entities that support the capital market, such as the National Bank, and such as the accountants, the legal professionals, and also yet to see those professionals, advisors, and also brokers and others who will be the stakeholder of the capital market. And as Mr. Ato Meles explained, the capital market It is true that it would be an independent agency. The structure is built in, you have 7 board members. However, one of the board members don't have vote. So you have 6 members who have vote, and 4 of them are from public, from individuals who are professional, who are committed to propel this effort to the next level. So that is the most important thing to do. I think that's been accomplished. So now, those 4 important, dedicated board members who actually committed to decide and propel this mission. Those 4 people are very critical and key for this. So with that, I don't want to take much of your time. I just want to give you some reflection how this process went, and it's really very meticulously done, revised, quality control, legal, accounting issues, and other infrastructure, very technical issues have been addressed during this process. So the framework addresses everything you can imagine that we run into problem or challenges or opportunities. So Ato Meldes mentioned that one of the important things is trust. Trust among the people who run this agency, trust among the people who are involved in the exchange, and trust among the professionals, the accountants, the legal, and others. The only way that this capital market will succeed with the effort and trust and also commitment from private and government people. I know Ato Meldes mentioned about IPO. Yes, there are not that many companies who can be able to go IPO immediately. But with great effort, there are companies who can go public within some period of time. They have to prepare to go IPO. What are the necessary things they have to do to go IPO? Those are, I think Ato Meldes mentioned that there will be training. Obviously, it's a new thing for us here. So it will be training how to go IPO. It's a secondary market. Who are those who can go secondary market soon? Those are things that has to be mapped out and execute this effort. So with that, I'm grateful to be here. I'm grateful that you have given me your attention, and I'm grateful that Ato Meldes to be part of your effort. Thank you.
And are there any questions already? Or are you going to force me to ask? Okay, I see 2 hands already. We're warming up. Let me start with Joseph. I think the microphone is not there yet, but maybe we can hear you.
Sure.
So the ground rules, please introduce yourself, where you come from, and ask the question.
My name is Joseph Kabur. I am a diaspora, born in Ethiopia, raised in Canada, but I've been here for the last decade or so. I had an IT company back in Canada that was listed on the NASDAQ Stock Exchange, and so I get that distinction for being one of the Ethiopians that did that. My question is, how much involvement from the tax office on the development of the capital markets? I feel like the tax office is going to be a critical part of the ecosystem. Just as an example, if a company raises money at a certain valuation, par value, let's say, And then at the second round, raises money at a higher valuation. Current law says that the difference between the two is taxable at 30%. It will be considered like income, which is discouraging a lot of the startup companies right now from raising additional money. A lot of them do it unofficially, but obviously if you're going to go in the stock market, you can't do that. So that's my main question. And the second one is the credit ratings. Who is doing the credit ratings? Is this open to the private sector, or is the government going to do that? And I'm saying that both for the consumer and corporate ratings. Thank you.
Thank you, Yosef. Excellent questions. Very practical from the ground. There are people from the ecosystem here, lawyers, accountants, advisors, consultants, investment bankers. So we'd love to hear from you, from your points of view, on how you see the proclamation and some relevant questions like the ones Yosef raised. Let me go to Suhul. Right behind you.
Good morning. Thank you, everyone, to my list for the presentation. My burning question, to Yosef already asked, but I want to ask it in a different way, which is the revenue authority. Obviously, in the capital markets, when you're trading stocks, values go up and down. So, are you liable to make these kind of payments every time that your stock is traded? Number two, what is the sentiment or the feedback from customs or revenue authority today when this policy was being devised? I think if it's in the past, I mean, we've been, as a private sector, been very optimistic in terms of new policies that drive private sector involvement, but at the end of the day, always get disappointed by how it's implemented and the lack of coordination between different governmental agencies. So how do you mitigate that now instead of after capital markets are open? Number two is for the companies that are going to be listed on the exchange, how do you account for their financial reporting, transparency, and making sure that they're legitimate in terms of what they report? So for investors to have a reliable source of information, is there going to be another agency that's going to regulate and supervise these sort of reportings as they come out quarterly or annually? Lastly, it's related to, you mentioned that FDI or foreign investment is open to capital markets. Can you elaborate on that? Is it just for participating in the establishment and management of that, or is it actually FDI coming in and investing in local enterprises or listed companies? Because there are still some restrictive sectors for FDI, and how do you account for that? And what would be the licensing issues related to that? If it's going to be traded, it should be liquid, it should be fast. So having to go through the process of having to register and showing all of your documentation, how would that all work? I just cannot envision how that could play out. If you had already thought about that, thank you very much.
Thank you, Suhul. Again, more practical, excellent questions. Do I see any more hands? Particularly this FDI question, I'm hearing it from a number of people. So while we were organizing this, some who couldn't join us were able to transmit some of your questions and comments. One of the ones that kept coming up is this issue of the FDI. Capital markets are a fantastic way of increasing financial intermediation. However, their concern was that it would just be making the current amount of capital in the economy more more masalat kind of thing, rather than new money coming in. And should we not be really building trust with the market to be able to attract new money coming into the sector? So this is a question I heard a few times. So good morning. You can sit no more. Thank you for joining us. And so I will add one more question also, because I would love to Tesfai's reflection on this. So capital markets have different degrees of success in developing markets across the continent, I mean, you could really divide them into two. You have the Johannesburg, Nairobi, and Lagos maybe, and then the rest of the markets. It's rare to see them being very effective in terms of helping to drive economic growth and job creation in many ways. So my broader question is, what can be done to make sure that our experience is different, our experience actually, our market is designed to respond to the issues that we're facing. For instance, agriculture. I just see Dr. Eleni coming in. Agriculture is a big area of investment that needs to be tended to, but cannot necessarily be left to the market only, because although we need agriculture, it is also a long-term, higher risk kind of investment that is hard to come by unless some policies are used to incentivize it. I could say the same thing for small businesses, for startups. I can say same thing for the housing and mortgage market, where long-term finance has really been the issue of the ability of mortgage to raise mortgages in the Ethiopian economy. So I'm being very long-winded, but the one and two of it is, what efforts are we making to make sure that our capital market responds more fully to our needs of financing as an economy? Let me stop there and invite Tom and Lessa to respond.
Thank you, Enoch. Thank you for the excellent questions. So let me try to address questions with regard to tax. I think there are two questions on that. Whether tax authorities, especially the Revenue Authority and the Customs Office, have been involved in this and whether they are on board. In the presentation, I put that out as one of the to-do list, the work that we are organizing ourselves now to do. Tax policy is something that would be decided at policymakers level. So once the decision is made, I think the first step that we are trying to do is we are also trying to get support from technical support from development partners, IFC1 and the World Bank, especially in this area of like what kind of changes are needed to in the tax regime to make sure that it's friendly to market development. Once we have identified those, will be presented to the policymakers, and once approved, then the revenue administration, the customs office, those they would have to implement. They would have to come on board. So it was not necessary per se to engage the customs office in the drafting or in the work, in the capital market work itself, because that's not really their area of work. But we do acknowledge that the tax regime is very, very important and it needs to be looked at, and that's one of the priority areas. On the question about credit rating agencies who will do credit rating, as I spoke earlier during the presentation, credit rating agencies is one of the key capital market service providers or intermediaries, and it's open to not only to the private sector but also to foreign investors. Foreign investors can, or rating agencies can come here and open office. They can start the work. So the simple answer to the question is yes. The private sector it's open to the private sector. It's open to foreign direct investment as per the proclamation. In the licensing, there are basic licensing requirements, but the authority, Capital Markets Authority, would need to issue a directive on specific licensing requirements. On the question about accounting standards, yes, issuing an IPO has really a high bar in terms of the standard of financial disclosure. And those are highlighted at a general, again, framework level in the proclamation, but the details would have to be, clearly stated in the directives. And there is already a public agency that that regulates these issues. It's the Accounting and Auditing Board. And as I mentioned earlier, the reason why we make the Accounting and Auditing Board to be an ex officio member of the Capital Markets Authority is so that they can internalize the capital market requirements in their standards and their regulation. Yeah, that's for the important question, which also echoed here by Enoch, is about the role of FDI, foreign direct investors in this ecosystem. So the one angle is what will be the role of foreign investors in acquiring shares or buying shares in the exchange. And that would be basically governed by the existing investment policy. If acquiring a bank share is not allowed for a foreigner, then they will not be able to buy that. But if acquiring a salmon or beer company is allowed, then they will be able to buy that. So that's about their role in terms of participating in the market, in terms of how much, what they can do in terms of buying and selling shares. Now, there is also a related angle here in terms of the capital market, the capital flows regime, which is in the territory of the NBE. Maybe there could be, especially to safeguard the market from capital flows volatilities, there may be some rules in terms of like how fast a foreign investor can go out, because we do not want to have what is it, the term as hot money or like tourist investors. They come in and they for a speculative purpose, and they wanted to go out tomorrow when there is, I don't know, some security or conflict issue pops up somewhere else, and they just leave the country. So that's something that we really need to design. On the one hand, we don't want to discourage or foreign capital. On the other hand, we wanted to make sure that the people who are investing here would be investing not for the purpose of speculation, but for a really long view. So the second part is, what is the role of the foreign investors in the market itself, or market intermediaries? That is open, as I said earlier. You can come as a foreign investor and establish a rating agency. It can be an advisor, investment advisor. It can be an investment bank. You can invest in the exchange, set up, an exchange. So all these are open to foreign investors. So I hope this clarifies the foreign investment issue, and I will let Dr. Tesfaye to reflect on Enoch's question about the broader question about how to make our effort to develop capital markets effective and especially supportive of overall economic development. Thank you.
Hello. Can you hear me? Mm-hmm. Okay, good. I'd like to say a few words about the accounting disclosure or the IPO process. In the ideal world, obviously, you have mature accounting and auditing firms who are basically educated and experienced in this matter. So the process is they have the license to practice to audit and disclose all required items in their reporting. In Ethiopia, we don't have that. So what the plan to do is, obviously, we have to go to the drawing board and also probably license the auditors if they can really be able to audit pre-IPO companies. All secondary companies will go to secondary as well. So that is the first step. When Ato Marles was talking about capacity building, those are part of those. So the audit is critical. How about the lawyers? Do they know? So the lawyers have to review all the disclosures, and then are they aware what should be in those listed disclosures? So the lawyers have to be trained as well. So those are phases. We have phases that those people have to go through to do that. Is the accounting and auditing board is qualified to do that, to certify those auditors? I not at this time, but I think it will be during this process of capacity building, and they will be doing that as well. It's a process. So right now we don't have those, but I think during this period we'll be able to have those. Regarding the taxes, and as Joseph asked, I think tax is very critical and for investors, because why would somebody wants to allocate his or her fund from one to another? There has to be some incentive as well, especially when you start a new business, which is this is a new business. So there has to be some incentive for them to move from one to another. So I think that is also something that has to be worked out, and there has to be some incentive regarding taxes. Regarding the capital market and also how to support agro industry and as well as startups. Let me answer about startups. When you have the capital market, people will be able to sell their asset and also be able to have some disposable income. When they have disposable income from those trading of shares, they will definitely look into other options to diversify. So startup companies will be the target for people who made some money on stock market. So that's one source for a startup. Obviously, you don't have to be dependent upon those NGOs or others to give you a few seeds money. So I think people will be aware that they would invest their money earned in the stock market to startup and new ventures. The agro industry, obviously, it goes beyond the stock market because that is a large industry that has to be supported by not only by private, and also it has to be supported by government policy as well. It is a big project, and it has to be a priority project. The government has to focus on that, where there is a PPP model where it should be invested to accelerate agriculture. That is, let's face it, Ethiopia has one thing, has the water, the climate, and the land. But we are not doing anything on that. We're only about 10% developed in the country. So that would be one thing. But in terms of the stock market, obviously the capital market, how can that would support or help those sectors? Obviously, again, when people involved in the capital market, they would have some investment to make in other sectors, including companies which are not in the public, which are not public, or about to go public, or growing, potential growth, and people would invest, individuals would invest in those firms. So I think the other thing is, Henok asked about the why, in Africa there are about 28 countries have a stock market, and only about 2-3 are active to speak of. So how, what are we? Why would ours would be different than those? Johannesburg have been for a long time, and in fact Kenya has since 1954, Casablanca, and then of course you have our friend Egypt has one thing. It's new for Ethiopia. I think when we start, we have to start with imagination and also willingness to make it happen. And we have the potential. We also have the resources that we need to make this thing happen. So we have looked, I think Atomalis Group have looked all the stock market in Africa and as well as other countries as well. And I'm sure they have their own answer for this. But I can tell you there is no reason why Ethiopia should not have a capital market which is comparable to other African. I don't want to compare to Africa, but my apology. Why can't we be the best capital market in Ethiopia? We can do it. I think the groundwork has been done, and if that continue, and we have the right people, the right resources, and the public-private partnership model, and I don't see any reason why it should not be successful. The stock market itself would be a private-public enterprise, including foreigners who would bring talent in running the stock market. And also, there are many companies who are now share companies, and yet they cannot be able to sell their shares and an open market. So there will be the companies will be a secondary market and will be basically that will start on the stock market. That will bring some new money, the investment. Obviously, there will be exchange of stocks and shares. And Tomalis mentioned earlier that about mobilizing of cash fund. So this is also a way of mobilizing cash as well, because people will learn to invest on stock market, and then that would accelerate the growth of the stock market. So we can be one of the best run stock market if we all get dedicated. And private is also a major responsibility in the stock market, because the privates are the major player in the stock market. So all the stakeholders, the investors, the auditors, the government agencies, the attorneys, and obviously the investors in the stock market, and also other service areas like investment banking, advisory services, brokerage, and all these stakeholders, they are committed to make it happen. And also, don't forget, trust. The only way that this thing will be successful is trust. If we are not really anyone who wants to get involved in the stock market, as investors or as service provider, have to know that number one is trust. So if that trust is not there, and there's an impediment to our success.
Thank you for those wise words. I think trust could never be overemphasized in the issue of finance. So we have coffee ready. We value your time, so I want to give you an option. We do have at least an hour of conversation if you like. We could do a coffee break now and come back in 20-25 minutes. We could do just have it open so you can go in and get your coffee and come back. Or we can just go through, finish up, and then afterwards have the coffee. It's very important to us that you guys also talk to each other. The CEO's Forum is also a networking platform. If you don't do that, I will be a little bit unhappy. So you can't just run out and go home. I want to make sure you talk to each other, especially now that you don't all see each other. So which option I see Lenny shaking for the first two and then yes for the last one. Anyone? Yeah? Stay through? We finished? Okay. Excellent. So I'm looking for hands, so let me take a few more questions and we can have one more round of responses from the audience. Put them up. I see Eleni here and okay. So microphone here in the front, Dr. Eleni. And then second rounds will be allowed after I finish first time askers.
Okay, good morning. Good morning, thank you. And indeed, it is nice to see people rather than just virtually. I'm sorry I missed the first part of the presentation, but I have met with Dr. Melissa, so I'm somewhat familiar with things. But I had a few comments and questions. The first is, I might have missed it, but what is the ownership structure of the exchange? Because obviously that is very important. The second is on listing requirements, and I have looked at a lot of stock exchanges on the continent and elsewhere, and one of the big things that becomes a barrier to participation is what the listing requirements would be, and often, particularly in frontier markets contexts like ours, the listing requirements are prohibitive of smaller companies. So this goes a little bit to the question about startups and I guess broadly rich SMEs. And so, for example, the JSE in Johannesburg, started a second window of having an SME sort of second listing. I would say a pseudo, like sort of I don't want to call it a second window, but let's just say a second channel for a different set of listing requirements, so that smaller companies with less stringent requirements would still be able to participate. I think that would be very fundamental to encouraging participation in Ethiopia, so I'm just wondering if that's been thought about. Third is a market maker role, because some exchanges opt to have a market maker, and it can be a highly liquid investment bank. I don't know if we have such, we have highly liquid banks, but are they investment banks? And so in other words, is there a market making role that's been envisaged? I apologize if you've already covered this. The other thing is, I think, to the question about African exchanges, because I have spent a lot of time looking at African stock exchanges as well as commodity exchanges, obviously. And the real issue, if you go, for example, to Dar es Salaam, they trade every few days. They have 1/20th of the liquidity that ECX, the Ethiopian Commodity Exchange, has. Even Nairobi Securities Exchange has 1/7 of the liquidity that our commodity exchange has. Ghana has 1/10. Nigeria is roughly on par. So why are African stock exchanges relatively illiquid? Obviously, we don't talk about JSE because that's at world class, but in more of a developing country context or an emerging country context, why are our exchanges so illiquid? Partly it's because of the listing requirements, but it's also partly because of the structure of how the markets are not really set up for allowing retail investment, a role for retail investors and even speculators. So somebody's got to be absorbing risk and generating liquidity in the market making role that I talked about. So I'm just wondering, because I would hate for us to get down the road in 3-4 years and say, wow, our market is still pretty illiquid. That's the same thing that happened in Ghana, Nigeria, etc. So let's think through a little bit how we are addressing the issue of ensuring liquidity. And then, sorry, I'm going on a little bit long, but I've been thinking about this for a while. Then the other, and this is actually probably a very important point I would uniquely like to make, which is that there's a fair amount of intersection between commodity exchanges and stock exchanges. And many countries have, which started historically with 2 different exchanges, are increasingly deciding to merge them. And the reason is because there's one special product, particularly, that brings the two together, which is single stock futures. So many commodity exchanges, particularly in the US, are listing single stock futures, a futures contract on a stock in a company. So of course, our exchange here doesn't even have futures contracts at all, but obviously that's envisaged. But if we're going to be a little bit forward-thinking and visionary, then why not get it right from the beginning, which is to structure our securities exchange, our stock exchange, in such a way that it actually bridges with the commodity exchange, and even down the road, we think about merging them. And that's something I would actively encourage. JSC, bought the SAFEX, the South African Futures Exchange. So now SAFEX and JSC are on the same platform. Something London has done and others. So I would strongly encourage thinking about that. It's still early days. But if our exchange, our commodity exchange, is going to move towards where the world is going on futures exchanges, then it absolutely should be, traded in a way that those futures could also extend to stocks. So therefore, they're bridged, and even regulatorily, I think they should be bridged. And my final and last point, which is not really a big point for us right now, but something, again, if we're thinking visionary, to think about is cryptocurrency. With our exchange, our stock exchange, think about absorbing cryptocurrency. And I'm sorry if you've already brought this up. Thank you.
Thank you. How could I interrupt this list of excellent questions? Can we go to the back? Please introduce yourself and where you come from. I've seen 2 more hands, please. Yes, and I'll come back to you. Take this one.
Okay, thank you. My name is Asafa Sumoro. I'm just a capital market advisor at the NBE. Just wanted to comment on a couple of things that was raised earlier. So, in terms of one of the questions that was asked earlier, it was like trading volumes or trading valuation changes vis-a-vis taxes that was asked earlier. So, the values of companies could change quite frequently, and then how is the tax regime to accommodate those things? That's one of the questions that was asked earlier. So, in terms of taxation, usually, practical, the experience is taxation would be done just on annual basis. So, companies, when they report their quarterly reports. So, in that quarterly report, there's a provision for taxation. Always, what the value of a company, for example, when it's reported on a quarterly basis, accounts the provision for taxation, and then by the end of the year, again, all those provisions for taxes, after those provisions have been paid to the government and then accounted for, that's how the value of the company will be compared against the taxes. So even if the company value changes every day or every month, we don't have to worry about paying taxes every day or every month. That's one of the things that I wanted to say. And in terms of the general comments about the African exchanges vis-a-vis the exchange that we're, or the market that we're going to set up, how will it differ, or how can we be successful? I hope it was answered earlier, but just to add a few more things. One of the advantages that Ethiopia has is the size of the economy. So if you compare Kenya against Ethiopia, this is a very big economy. So there's a very big potential for issuing companies, a large number of companies to be listed in the future exchange. Of course, there's a lot of work to be done in terms of preparing companies, but the size of the economy is very, very important. And the other thing that we have as an advantage is we have, compared to many African countries, we have like a growing large number of private equities and venture capital companies in Ethiopia compared to other African countries. So these companies, they need exit route in the future. So the stock exchange would be a platform for these companies to exit. So that would also, bring some more companies into the exchange. So in terms of course, liquidity, Dr. Lenny has commented something on that. But liquid markets, they need a robust infrastructure. So those are the kind of things that we considered in this proclamation. So we have given significant emphasis to bring modern technology, modern infrastructure that would streamline trading processes, and also the regulatory framework to address those issues. So that also adds into the development of a robust capital market in Ethiopia, which is in mind. It all takes into account those things. And then the question of retail investors that Dr. Levy also mentioned, we have a scheme called a collective investment scheme, which will encourage retail investors to participate in this market large number. We have like the Illiquid platform in Ethiopia. Those kinds of platform would go into the collective investment scheme that would channel, small money, but on aggregate, it will add into the liquidity of the market. So these are things that we actually considered in designing this proclamation. And the other things, we have large number of state-owned enterprises, like Ethiopian Airlines, Ethiopian Telecom. And these companies, when they list, or when the government decides to list, or when opportunities come, these are the kind of things that would add into our market. So I know I've been speaking to our friends in Kenya. They are they envy Ethiopian market. Literally, they envy because of the size of the economy, because of the the number of state-owned enterprises that we have here. So we have to value all these things and to be confident about having a market that will succeed in the future. I think, these are the other thing in terms of liquidity. Basically, the regulatory framework that we have designed is also a framework that will give confidence to investors, confidence to market participants, and also all the provisions like the compensation fund, the capital market tribunal, also the understanding of illicit trading practices in the future. All these things are into the trust of investors that will also help creating a liquid market in Ethiopia. So I just wanted to say these two things on the questions yesterday.
Thank you, Ato Asafa. Efeson, then who's next? Please introduce yourself and where you come from.
Sure. Hi everyone, my name is Efeson Halamikil. I'm a senior partner at Cornerstone Advisory Services. And I have a couple questions. The first one is related to the liquidity question, but it's more around, is there a thinking of how to phase in listings? And are there any priority companies or sectors to be listed? Trust is very critical, so is perception in terms of the market and having confidence. And so the first few listings will be critical for the long-term success. So I want to understand if there's any priority of companies or sectors as I mentioned. The second question is, it's around regulating trading houses. And so while the long-term goal of capital markets is to increase liquidity for investment, there are short-term financing needs and credit implications. So for example, trading houses do need to have some sort of collateral to facilitate trades. Settlement only happens in 3 days usually, so there's a very short working capital need. So I want to know if there's been thinking around, who will be financing that? Will it be public enterprise? Will it be the private banks? Will the foreigners be required to do that? Because that has huge implications on the returns that they can make from their trading activities. And secondly is, has proprietary trading been considered, where basically trading houses will be investing in stocks short term to really facilitate customer orders, but also to increase their returns. And on that note, would they be allowed to facilitate trades in stocks in closed sectors? So for example, if it's banking sector, would a trading house be able to facilitate those transactions on the exchange and then somehow have to hold those shares? So just, if there's any clarity around those specifics, that'd be helpful.
Thank you, Efeson. On the right side. I know the questions are piling up, but this is the last round, and I'm only going to give one more chance for the panelists to respond. So if you have any questions, please keep them up. We are running out of time.
Okay, thank you. My name is Merit. I'm managing partner of Program Investment. Wonderful presentation, gentlemen. My question is going to be very quick. So we expect the proclamation to be passed before Sani Salasa, June 30, right? So when do you expect the Capital Market Authority to be established, up and running? What is your estimated time frame? Because the board has to be there, PM has to choose the boards, it has to, budget has to be assigned, and then the Ethiopian Securities Exchange will be launched later. Just give us an estimated timeline. Thank you.
Thank you. Any more? Going once, going twice. Okay. I have two questions I'm going to add on top of this, and then we'll close it out. Quick questions, really. A big source of liquidity in Ethiopia could possibly be pension funds and insurance funds, but mostly pension funds, because by law they've been restricted from their ability to invest in a lot of areas. They could only buy, I think, government treasuries until very recently, as far as I know. Has that changed? Would they be allowed to invest in stocks? That's the first question. The second question is playing on the question of trust and capacity. Some exchanges are set up in partnership with foreign exchanges that have already built sort of the track record and the trust. They tend to offer the opportunity to chaperone or grandfather or any kind of arrangements in that sense. Is that something that you guys are considering, and would that make sense for Ethiopia? So I just want to add that, and it would be good if Ato Tesfaye also reflects on the two questions in addition to the others.
Thank you again for very, very good questions. I will try to respond as much as I can. And now I know that Asafai, my colleague, is here. I introduced you in your absence earlier, so I will leave some to him and also Asafai. So Dr. Ileni's question about ownership. So the ownership structure of the exchange would be predominantly private sector owned, with public ownership in the form of to instill confidence in the market or encourage private investors to participate, with a maximum ownership of 25%. So that's the structure of the exchange, or the Ethiopian Securities Exchange, the first exchange. And then, of course, when the level of market development really allows, or the existence of other exchanges, including the derivatives exchange, purely 100% private sector exchange, or security and derivatives exchange could be licensed by the authority. The proclamation gives the authority that mandate as well. In terms of listing requirements, we don't want to be prohibitive, that's true, especially for smaller companies. So we try to balance. I think this question may be addressed in, related to that, about this, the question of what will be, why we will be different in terms of being successful compared to other African countries or peers. So one of the advantages of being a latecomer is that we can learn from the successes and failures of others. That's we are trying to do here. We have been working with IFC, World Bank. They have set up a team to help us, technical team, that has global experience, not only in Africa, also in Latin America, in Asia. So they do have the perspective of what worked, what didn't work, and starting from the design of the drafting of the proclamation, we have tried to balance that, being restrictive, being too prohibitive, versus a proper regulation. So we tried to make sure that the proclamation is as general as possible, so that the authority, the Capital Markets Authority, will have flexibility in designing through directives or maybe regulations, in designing the proper listing requirements, disclosure requirements, depending on the level of market development, or depending on the policy objective. If we wanted to, for example, to encourage emerging companies, there is a particular provision which says that for emerging, with regard to listing requirements for emerging companies, the Capital Market Authority will issue directives. So, so that's kind of the lesson that we also learned from the experience of other countries. So we take that point, the idea, the need for striking a good balance between market development and protecting the interest of investors, and also preventing systemic risk, mitigating systemic risk. So for example, one area, so one of the objectives of the proclamation was to make sure that it's in line with the ISCO principles, the current ISCO principles. We have a team that specialized at the IFC on this, which reviewed each and every proclamation with the eye of the ISCO principle, and we tried to make sure that it's consistent, so that we, from the get-go, we will be an ISCO member. So it was very important for us to do that. But one thing that we introduced in as objective of the authority was market development. And we had this feedback from the IFC that, well, it's not in the ISCO principle. It doesn't say that the authority should have a mandate for market development. But we thought that for starters like ours, it's very, very important that there is a champion to support the development markets, and it was one of the key objectives of the authority, and that's why it's part of the proclamation. I think, we need, having said that, we need to be humble. I think we need to be humble in terms of what, the challenge that we will be facing. I mean, there are several challenges that we discussed during the presentation, and the reason why we identified those challenges, especially based on the review of the experience of other countries, is because we need to make sure that we are ready to confront them, and we need to work. We need support. We need to seek the support of other countries, including the experience. I mean, the other peer regulators, the Kenyan Capital Market Regulatory Authority. They are keen to support us. We will work with them. We'll get their support based on their experience. So we need to be humble about. I think we cannot be really say say that the road is smooth. We agree, with the interface, the need for creating that interface between the commodity exchange and the securities exchange. We have very, very carefully looked at the idea of, in fact, one of the options, alternatives that we considered is launching the securities exchange with the commodities exchange platform. But we looked at, the pros and cons and decided that it needs to be separate because we wanted to make sure that this is a private sector-led endeavor. As you know, the commodities exchange is a public held company. It's very, very difficult to develop securities exchange with government ownership. And that's why we thought that it's very important we start here, but ideally, hopefully in the future, they will merge with the model of the ESX, not ECX. With the cryptocurrency issue, we have not. It's a very, very new, completely new territory. I don't think that we are there to take that kind of adventure, but in the future, maybe the authority may.
Kenya is doing it now.
Yeah, well, I think the authority could look at it, but at least in the context of this current proclamation, we did not really look into that issue. There was a question about, I think Efeson asked about sequencing of listing in terms of prioritizing subsectors. We didn't think about that. We didn't. I mean, basically there is a uniform listing requirement, which any company, any sector, which meets that requirement. But the idea of having a clear and transparent regulatory framework is making sure that those who are able to list will be listed. Having said that, there are special regions for emerging companies. As I said earlier, for smaller and potentially growing companies, there will be a different region. I will leave the remaining questions, especially on the trading house, to Asafa. One thing maybe so one question about the CMA when it will be established. I think it's very hard to give a definitive response, but hopefully, ideally, we should have. In principle, the second day following the ratification of the proclamation, we can set up the authority. That's in principle, but it's going to depend on all sorts of things, whether we'll be able to identify and get the right set, people, get the right expertise, and identify financing. But hopefully, if we have that basic skeleton, and especially with the key personnel, senior personnel by the end of 2021, that will be good. By in a year time, if we have the Capital Market Authority up and running, I think it will be a success. Pension funds, I mentioned earlier during the presentation. Yes, that's one of the key issues that we need to look at, because current regulation restricts them to government securities, but definitely they would have to be able to engage in the market without their involvement. there will be no liquidity literally in the market. So that's something that we looked at. But also, the last question that you asked was about
Possibly building the Ethiopia Securities Exchange in partnership with another more well-known commodity
exchange.
capital exchange.
Yeah. So we looked at that as an option. Again, one of the options was with the commodities exchange. Another option we looked at was whether we should be considering, collaborating with, partnering with other exchanges or listing in the platforms of other exchanges. But I think we are big enough to have our own to do it here. But in terms of bringing those exchanges, in terms of making them to invest in our securities, Ethiopian Securities Exchange, especially in return for bringing their technology, that's something that we are looking forward. So having said that, I will pass the mic to others.
Okay, what an exciting period. Trying to take my mask out. Okay, I think Atomalis have answered all your questions. I just want to say a few words regarding Mer's question. When the CMA to be there up and running, I think Atomalis has answered it's about 12 months. I think this is a progression. Obviously, the CMA, the authority, the first phase, and the second phase would be the exchange. And along with the exchange, there are other stakeholders that has to be also organized along with that, like the brokerage and let's say banking and others. So time-wise, I think putting time is not really the most important thing. Doing the right thing is the most important thing. I've heard before that the stock market has to be there in 2020. And then I was the opponent of that, that notion at that time. So even now, I think we have to go the right way. It takes time and really implement it, the right process, the right technology, and capacity building. And all those have to be in place before really opening for stock exchange. Regarding, obviously, Enoch's questions, I think Atomalis have answered the insurance and the pension fund. Obviously, that is a regulation, and also it would be mutual funds as well. Hopefully, we'll have that as well. And using the other exchanges with Ethiopian, the 25% that the law allows for foreigners, I think the exchanges who are interested to share their knowledge and technology would be able to buy the 25% allocated to foreigners. So that's a good thing. I think that's all those questions. I guess you have.
Market maker.
Okay. Yeah. Okay. The other question is the market maker. Do we have really how do we a bank that could do the market maker? Obviously, that will really also come along with this process. We have to have market maker when a company go public. Obviously, most of the shares will be purchased by the market maker, basically, which is the investment banker. And they have to have their own account and have the money to buy those shares and then resell it to the public. So that is also in the process. That's also in the proclamation, and the requirements and the licensing. All that would come out of the directives, but the general direction is in the proclamation. Thank you.
Excellent. thank you all. I would just like, in closing, to emphasize how important and historic a time that we're embarking on is. It's really, really exciting time. Really, really exciting time. It's a new opening for the private sector to have the resources and the capability to make an impact and to grow as private sector actors themselves. I would also like to underline that whole point of the private sector. We've been yelling and crying and kicking and screaming for many years now, and here's the opportunity. We have to step up. I cannot re-emphasize that. We have to step up, otherwise, why would there be room for the private sector if we cannot become active players to make a difference on the ground? Just want to close with that. I'd like to thank, I'd like you to join me in thanking our panelists here. Obviously, Ato Melissa, not just for being here, but for providing leadership to this sophisticated and complicated initiative. And Ato Tasfaye, bringing his years of cross-continent experience to bear to support the Ethiopian process here. I'd also like to thank our team at Precise, Kal Kidan, Qadist, and everyone else for putting all of this together. I would ask finally that you all stick around for a few minutes, at least say hello to each other. Let's not lose our humanity. This virus cannot defeat us to that level. And hopefully you can also talk more business. Thank you so much. Thank you for coming. Enjoy the rest of your day.
Oh, sorry.